Hi, and Happy New Year. I'm Grant Mundell, Investment Specialist with Equity Trustees with the December Investment Market Review. It was another strong month for investor returns following on from the gains seen in November. The key highlights included, firstly, equities rallied strongly. The Australian share market rose 7.3%, outperforming both the US S&P 500 and the MSCI World Equity Index, which rose 4.4% and 4.7% respectively in local currency terms. Fixed interest markets also rallied. The values of bonds rose as investors priced in lower rates. This saw yields for both US and Australian 10-year bonds fall to below 4% after being as high as 5% in October. The key reasons for both equities and bonds rallying included, firstly, the US Federal Reserve left rates unchanged and guided the market to a higher chance of more interest rate cuts in 2024. Also, inflation data continued to come in lower than expected in a number of countries, meaning investors believe that we have hit the peak in the interest rate cycle, cost of living pressures are subsiding, and that rates will fall next year. Lower rates should cushion the slowdown in the economy and support asset values. M&A activity also picked up. It wasn't that long ago that the market was concerned that interest rates would be higher for longer, and sectors such as real estate that were sold off during that time have rebounded strongly over the last 2 months. In Australia and the US, labour market data remained resilient. Consumer confidence in Australia remains weak, however, and per capita growth is soft. However, this is being offset by surging migration. In China, despite the government starting to stimulate the economy, data has remained sluggish. Interestingly, Chinese steel production has remained firm as they export to other parts of the world, bolstering demand for iron ore. The iron ore price rose another 4.5% to finish around $140 a tonne, supporting the likes of BHP, Rio and Fortescue. Conversely, despite the continued conflicts in the Middle East and between Russia and the Ukraine, oil continued its fall, closing down another 6% on lower demand and higher than expected supply from non-OPEC and US producers.